What's up, everybody? It is Wednesday, August 5th. My new podcast is out. That's right. You can go get it if you go to my website, pitbulleconomics.com, and click on the tab that says podcast. You could also get it on Spotify, and you could also get it on iTunes. So check it out. I talk about gold in there. I talk about another one of these policy guys, man. Like, blows my mind. I mean, do these guys understand anything? Like, you really got to listen to this. This time I'm talking about Neil Kashkari. He is the president of the Minneapolis Fed. Said some really dumb things on Face the Nation last Sunday. What else? Gundlach! Jeffrey Gundlach made a ridiculous comment on Twitter. I had to chime in about that. Anyway, it's on my podcast. Go check it out. Go to pitbulleconomics.com. Click on the tab that says podcast. And by the way, while you're at it, why don't you sign up for a 30-day free trial of MMT Trader. Let's go over some new developments. So another strong day in stocks. We had about a 1.3% rise in the Dow Jones, fractional rise in the NASDAQ, about a 1% rise in the S&P. Gold, hey, I think we got up to 2,070 today. We settled around 2,040. I said once we get through that 2,000, gold futures open interest is really still kind of low. Like, you look at the price level, new all-time highs, you'd think like the market would be so crowded with participants, but 599,000 in gold open interest, that's not a lot. I mean, in January, it was up around 800,000. Now, I have to check it out as of yesterday what it was, but the last I saw it was below 600,000. I mean, that is not a crowded trade. How about silver at $27, man? The dollar, the US dollar, down again. I told you, we're selling into these rallies. I made the video last week. I maybe even mentioned it yesterday. I don't know. Or I mentioned it on Monday. I said I'm selling into the dollar rally. I had some people email me and say, Mike, though, shouldn't you wait? I mean, the problem with waiting, again, it's this, you're getting into this timing aspect. And I don't like to do that. I like to put time on my side, not be needy for time. So I said to the guy, look, what I do is I determine what the basic conditions are. I determine what the trend is based on those fundamental basic macroeconomic conditions. So for me, the dollar's trend is down. It has always been down. And when it rallies, I sell. And I manage that strategy so that, I sell a little bit, but I build a position. So, I've been building a position in this thing for years. And the last 2 years, like a lot of you have been following me, and many of you probably like, Mike is wrong on the dollar, ha 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 ha. That position's in a nice profit right now. Anyway, dollar's going down. All right, stocks are strong. Look, let's look at the fiscal flows. Now, I'll admit, and I said this last week, a lot of you criticized me for being flip-floppers, fiscal flows, spending is extraordinary. Extraordinary. It has not pulled back at all. Now we're in the new period now where we don't have like the $600 weekly unemployment benefits. So I was expecting to see a beginning of a decline in the year-over-year comparison in spending. That has not happened. Now, let me restate what I said yesterday. Spending is no longer accelerating. But spending is so huge that even though it's not accelerating, that year-over-year gap is still increasing ever so slightly. It's not increasing at the rate it was before, but the gap is there's so much more spending going on. So that's holding everything up. And I think I explained that government spending flows to corporate profits. Now, on that note, there's two other things that look kind of interesting right now. And by interesting, I'm talking about maybe a change, a shift in the winds, all right? One of those things is corporation income taxes. Now, on the daily treasury statement, you see that reported every single day. And in the last 2 days, corporation income taxes fell below, I'm talking about the daily corporation income tax deposits into the treasury fell below last year. That was the first time that happened since June 16th. Now you remember, mid-June was when a lot of places started opening up, and I talked about this. I said corporation income taxes were starting to rise faster than at the same time last year, and that was an indication that the economy was picking up. Remember, New York City opened up. A lot of states and localities started to open up in mid-June, and we saw the pickup in those numbers, and that was a profit pickup, it was a sales pickup. But in the last 2 days, it has dipped back down below prior year levels. So that's number one. Number two is something that we have been expecting. Average daily unemployment benefits starting this week are already down 15% from same time last week and down 25% from 2 weeks ago. But we expected that because the $600 is not going out anymore. So that's the beginning of what looks like a little bit of this fiscal weakness kicking in. The corporate profit thing is, I was waiting to see something like that. I knew the unemployment benefits were going to start to trend down, but the corporate profit thing is very interesting. However, overriding everything, spending is still massive. You're not going to get any big correction in the economy right now until we start to see that thing slow down. Market is extremely overbought. Remember, the Dow Jones has not made a new all-time high for the year. The S&P has not made a new all-time high for the year. The Russell has not made a new all-time high for the year. It's only the NASDAQ. And on that note, Bank of America downgraded Apple today to neutral. So there you have it. Anyway, go check out my podcast, listen to it, and subscribe to this channel. And go to my website, pitbulleconomics.com. You can listen to the podcast, and you can sign up for a 30-day free trial of MMT Trader. I am the only one who has an applied approach to MMT, plus the mental game, plus everything else. See everybody tomorrow. Bye-bye.